Did you know that over 90% of individual investors fail to beat the market in the long run? Or that more than 80% of investors panic and sell during market downturns? The truth is, most people struggle to grow their wealth because they don't have a clear strategy. But what if you could change that? In Think and Grow Rich, Napoleon Hill reveals powerful principles that can help anyone achieve success, not just in business, but in investing too. And guess what? Value investing aligns perfectly with his teachings. Hill's timeless wisdom isn't just for entrepreneurs, it's a game changer for anyone looking to build real wealth over time. In this video, we'll dive deep into the strategies from Hill's book that can transform the way you invest. We'll explore how to visualize success, turn challenges into opportunities, and build lasting wealth through consistent, smart decisions. Stay tuned as we unlock the secrets to becoming a master of value investing, and maybe even change your financial future forever. Let's get started. Chapter 2. The Power of Belief: How Mental Attitude Shapes Investment Decisions. In Think and Grow Rich, Hill emphasizes that belief is the foundation of success. He says, whatever the mind can conceive and believe, it can achieve. This idea is incredibly powerful, especially when it comes to value investing. Investors must have unwavering confidence in their ability to identify undervalued companies and hold onto them until their true worth is realized. Warren Buffett, one of the greatest value investors of all time, credits his success to belief in his strategies and in the power of time. He's often quoted saying, "The stock market is a device for transferring money from the impatient to the patient." To truly succeed in investing, you need a strong belief in your decisions, even when the market fluctuates or others doubt your choices. Research backs this up. A study found that investors who stick to their beliefs and strategies perform significantly better than those who let fear or market hype dictate their decisions. As you develop a belief in your investment strategy, it will become easier to stick with your plan, even when times get tough. So, the next time you're considering an investment, ask yourself, do I truly believe in this? If the answer is yes, then your mindset will set you up for long-term success. Chapter 3. Mastering the Art of Persistence: How Patience Wins in the Market. Napoleon Hill writes, persistence is to the character of man as carbon is to steel. In the world of value investing, persistence is essential. When you buy undervalued stocks, you're committing to them for the long haul. Market fluctuations may test your resolve, but successful investors know that patience pays off. Think about it. During the 2008 financial crisis, many stocks were at rock-bottom prices. But those who persisted and believed in their strategy saw significant returns as the market recovered. Companies like Apple and Amazon, which were trading below their true value at the time, became some of the most profitable investments in the years that followed. In fact, a study by Credit Suisse found that holding stocks for longer periods, rather than trying to time the market, consistently leads to higher returns. Investors who are patient enough to wait for the market to recognize a company's true value see the biggest rewards. Consistency and persistence in following a value investing strategy are what separates successful investors from those who give up too soon. So, the next time you feel tempted to sell when the market dips, remember Hill's advice: the successful person will not be swayed by temporary setbacks, but will persist and eventually achieve their goal. If you're finding these tips helpful, don't forget to hit subscribe for more valuable insights into value investing and wealth building strategies. Chapter 4. Building a Mastermind Group: How Collaboration Can Amplify Your Investment Success. One of Hill's most powerful ideas is the concept of the mastermind, a group of like-minded individuals who support, challenge, and push each other to greater heights. This is critical in investing. Value investors often find that having a community or advisory board can enhance their decision-making process. Warren Buffett and Charlie Munger, for example, have been partners for decades. Their collaboration and shared knowledge have created one of the most successful investment partnerships in history. By combining their insights and strategies, they've been able to make better decisions than they could individually. Building your own mastermind group in the investing world could be as simple as finding a few people who share your values and goals. This could be a mentor, a close friend, or even an online community. The key is to exchange ideas, ask tough questions, and challenge each other's thinking. Hill once said, "Two minds are better than one," and this holds true for successful investing. The collective wisdom of a group can also help you avoid blind spots and make better investment decisions. You'll see the market from different angles and have support when tough decisions arise. Chapter 5. The Law of Compensation. How Value Investors Reap Rewards from Service. Hill's Law of Compensation states that you are compensated based on what you give to others. In the world of investing, this concept can be understood through the lens of buying undervalued companies. By providing capital to these businesses, you allow them to grow and, in return, you receive financial rewards as their value increases. Value investing is about identifying companies that are not only undervalued but have the potential to provide long-term benefits to shareholders. As these companies grow, so do your rewards. It's about serving the market by investing in companies with strong fundamentals, even when the market hasn't yet recognized their true potential. This is what separates value investing from other strategies. It's not about chasing short-term gains. Instead, you're investing in the future and providing companies with the support they need to grow. The reward comes as these companies realize their true value over time. Chapter 6. Defeating Fear. Embracing risk with knowledge in the stock market. Hill teaches that fear is one of the greatest obstacles to success. He says, the starting point of all achievement is desire, but fear often stops people before they even begin. In value investing, fear of loss or fear of uncertainty can lead to poor decisions. But successful investors know that fear can be overcome with knowledge and strategy. Think of legendary investor Benjamin Graham, who developed the value investing philosophy. Graham encouraged investors to focus on the intrinsic value of companies, not the daily market fluctuations. When you have a solid understanding of what a company is worth, fear loses its grip on your decision-making. In fact, a study by Morningstar found that investors who make decisions based on solid research and long-term value are more likely to stay calm during market downturns and achieve better returns in the long run. The key to overcoming fear is knowing what you own, understanding why it's undervalued, and having the confidence to hold onto it until the market realizes its true worth. Hill's teachings on overcoming fear can help you become a more confident and successful investor. By trusting your strategy and focusing on the fundamentals, you'll be able to make better decisions, even when others are panicking. If you've enjoyed this deep dive into value investing and the teachings of Napoleon Hill, make sure to subscribe and turn on notifications so you don't miss future content designed to help you build wealth and achieve financial success.